Hey, welcome back everybody. You're tuning in to howtoplaystock.com. My name is Kepley. Today is April 6th, 2017. In today's video, I'm going to cover long-term investing versus timing the markets. Okay, when I mean timing the markets, I mean like day trading and playing the options market, stuff like that. So stay tuned, keep watching, and we'll get into a discussion here, and I'll show you some of the things that I've learned along the way in regards to long-term investing and timing the markets, and what I think works better as far as taking an approach that's going to reduce your risk and increase your odds of winning and beating the stock markets over longer periods of time. So stay tuned, and I will see you in the next segment of this video. Okay, so we're back here, and in today's video I'm going to be covering long-term investing versus timing the markets and which one I think works better, okay? So getting started, if you're following my channel, I've talked numerous times about reducing risk and increasing your odds of beating the market returns over longer periods of time, okay? Now, one thing I've noticed when I've studied, some of the better investors and some of the wealthy investors that are out there, one thing I've noticed is that a lot of them don't take significant risk. In other words, they know their odds when they get into investing in anything they do. They like their odds to be in their favor, okay? Now, with that in mind, I'm going to talk and switch gears here and go into timing the markets a little bit. Just from what I've read and my own research that I've done, I've found out that 96% of hedge funds, which are your professional day traders out there managing like 401k accounts, the mutual funds and stuff like that, all right, 96% of those people will not match the market returns of the S&P 500 on an annual basis. Okay, 96% of them. Now, the 4% that do match it or beat the market, they might be able to do that for about 5 years, maybe a little bit longer if they're really good. But over long periods of time, say 10, 15, 20 years, they always lose, okay? The market will always win. In other words, the house always wins. You've heard of that term before, that phrase. That's what I'm talking about here. And when I'm referring to the house, I'm talking about the overall broad markets, okay? Now, you've heard me touch on fundamentals quite a bit lately, and the reason for that, again, is because you've got investors, okay, and then you also have speculators. Now, these are the two types of people and personalities that are out there when it comes to investing. All right, now, I say investing, and I say that loosely because investors are long-term. And I consider myself, because I pay attention to a lot of the fundamentals, I consider myself more of an investor, set up for returns over longer periods of time rather than trying to time the markets, which would be your speculators and day traders. Simply put, the odds are in my favor going more long-term with an investing approach, because I'm not trying to speculate. I'm not trying to guess. You can reduce your odds of losing as a speculator or day trader. A lot of that has to do with studying and keeping track of trends on the macro level and on the micro level. In other words, the macro level, that would be everything that's going on longer term, over longer periods of time, and it might be something that refers to, I don't know, a geopolitical event that's taking place or is getting ready to happen, monetary policy on a global scale. Okay, so that's macro. Micro is when you're specifically going in under a microphone, like a microscopic lens, and you're zooming in on either an index short term, say like 2-3 months, 6 months, or you're going in on a company and you're actually doing a lot of in-depth research on a specific company, that kind of thing. So it's more on an economic local level on the micro side. So that's the difference between those two. But if you're speculating, you want to pay attention to both of them. You know, just from my own experience so far, day trading, I know that the times that I've lost money when it comes to speculating, it's normally in part, you know, due to the fact that I wasn't paying attention on a macro level. So I wasn't, you know, there might have been unknown variables that occurred in the markets, such as, you know, just for example, yesterday, Janet Yellen came out with the Federal Reserve and announced that they were going to be unloading their balance sheets. Okay, now that was unexpected. That was something that nobody really saw coming. That kind of thing, when it hits the markets and that kind of news hits the markets, it can affect overall broad markets like we saw yesterday. So for example, yesterday around like 1 or 2 p.m., we were in a rally on the broad markets for the S&P 500. It was up approximately 150 points. When Janet Yellen came out and announced that, everything just started taking a nosedive. And we ended up in the day with a negative 40 points. Now, if you were a speculator and you had trades going during that time frame, you weren't probably expecting something like that from the Fed to come out right away. And therefore, you know, you could have very possibly lost some money yesterday due to the unknown variables on a macro level. So that's what I'm talking about. When you're speculating, you want to pay attention to both. I like to really try to focus in on the macro level more so than the micro, because when you're looking at charts on a macro level, you can span out over longer periods of time. So you can look at charts that are 1, 2, 3 years, you know, 6 years, 10 years. You can look at you know, everything spread out over longer periods of time and get a better idea of maybe what it is that the markets are actually doing, and you might be able to predict or increase your odds of coming out on, you know, the winning side of a trade by knowing, you know, what's going on a macro level. So that's why I say you want to focus in on that if you're going to be a speculator. Now, these are really basic things, but again, these are things that you constantly have to pay attention to when it comes to your own personality. You know, as a beginning investor, somebody who's watching this for the first time, who doesn't know much about my channel, this is what I cover, is broad topics on investing, how you get started, how you put a plan together so that you can reduce your odds of losing money, because what you don't know about the financial markets can hurt you, and that is the truth. That is the God honest truth. So with that being said, I want to also let you know, I've been creating a e-guide, a beginner's guide to investing. It's an e-course over the past like month and a half or two, and I finally think I have it complete. I might throw another video in there, I don't know yet, but basically it's going to take, it encapsulates the entire 8 years of my investing, all the experiences from my mistakes to some of my successes and what I've learned along the way by doing research on others, some of the greatest investors on planet Earth. And I packaged everything in on one e-course that's approximately about 2 hours long, and I give you a guide as to how to get started, what you can do to reduce your risk and stuff like that. Now, I'm touching on basics of your personality, and the reason why is because if you haven't subscribed to my channel, go ahead and do so. But if you watched me and you've been following me, I talk about cycles every now and then with markets. You got a business cycle, you have a wealth cycle of a country, that sort of thing. And I'm really big on that because right now, if you look at where the markets are, I've been shooting a lot of videos on fundamentals. Okay, and the reason for that is because we're going into a recession, maybe a possible depression here in the next 4 or 5 years, simply based off demographics. Okay, in my previous video I shot, I covered demographics and the baby boomers who are going to be retiring. We're going to have 3 sellers for every new buyer over the next 15 years coming into the markets, which means markets are going to have to come down. Now, if you're somebody who's looking to invest, okay, and you absolutely have to be in the stock market right now, or you think you do, check out the e-guide course that I have on the Beginner's Guide to Investing, because I basically paint a picture for you of how markets work, how to reduce your risk based upon strategies and portfolio allocation that I have found from guys like Ray Dalio, Mark Faber, Jim Rogers, you know, Bill Gates, Warren Buffett, just all these really wealthy investors and people that have been investing for 70, 80 years. And I've taken some of the stuff that they've taught me, I applied it to my own portfolio. So I put my own money on the table to test it over the last 2 years, and some of the results that I got were nothing short of freaking incredible. Okay, so if you want and you absolutely feel like you have to get into stocks right now, I would highly recommend educating yourself first on how markets work and the strategies that you can follow upon. So in other words, all I've done here, I'm no genius. I don't know, I'm not a guru. I'm not a financial advisor. But what I've done is I've stood on the shoulders of giants and applied what they've taught me to my own strategy with my portfolio allocation on paper assets so that I can reduce my odds of losing. All right? So go ahead and check it out. Again, it's completely free. There's no charge for it. It's still kind of in a beta testing phase right now. So, if you feel like you want to go ahead and check it out and educate yourself a little bit on what it is that I've learned over the past 8 years, feel free to do so. And then go ahead and give me some feedback on it too, because there's things, like I said, there's a couple videos I might, throw in there as little bonuses or just brush up on. So any feedback I can get on this would be great. But I will let you know, if you're planning on investing right now in the stock markets, number one, I would strongly recommend against it just based off the demographics and the population. Again, I shot a video on this. If you haven't watched it, go back and check it out. You can subscribe to my channel and check out the playlist. It's the demographics on baby boomers. That was the previous video I shot, and I discuss in there how the markets are coming down. So I strongly recommend, if you're looking at getting into stocks right now and paper assets, think twice about it. If you want to, go ahead, but I would highly recommend educating yourself on the stock market first, how it works. Get familiar with your personality, okay? Because that is one of the key, it's one of the critical or crucial parts to investing or being a good investor, is knowing your personality and which one you fall into. All right. Now, I'm not going to be a hypocrite here and say I don't day trade at all, because every now and then I will, if I feel like I have a good trade going, or the fundamentals are right and the setup is right for a trade that I can make short term. But I don't do that very often, and the reason why is because I just don't like my odds. Okay, I would rather, I would love my odds to be like 80-20, 80% that I'm going to win and 20% I'm going to lose, or even lower than that. And you can definitely do that if you know how to set up a portfolio and allocate it appropriately. All right, and that is some of the stuff that I'm teaching in my e-guide. Now, things change over time too. All right, we all know that. And one thing you cannot do is predict the future. But what you can do is educate yourself again on the different asset classes that are out there, how prices change and fluctuate throughout time, and how the overall economy works. Because once you understand all that, you can set yourself up on the right side of the transactions that take place during wealth cycles of a country or business cycles that last every 8 to 10 years. And if you know how to do that, then timing the markets, like I was saying here, is a little bit easier. All right, but you're not day trading. You're timing the markets long term as an investor. So I hope that makes sense for you. I'll leave a link again for the e-guide in the description below, so you can check that out. All you have to do really is just sign up for it and then start in on the courses. I've got videos that you can download, and I've got PDFs that are like basically PDF versions of the videos that you can download as well, so you can go back and read over them. But that's all I have for today. Hope you guys are having a good one. These are today's investors' investing tips. And remember, guys, income is the outcome, all right? I'll talk to you later.